And we are back. Welcome everyone to our power scanning session. It is January the 3rd, 2026, our first webinar of the new year. I'm super excited to greet you all back in the new year. I hope you all had fantastic holidays, got some time off, relaxed a little bit, recharged the batteries, so to say, perhaps had some time to travel to enjoy time with your family and friends. So welcome back, everyone. And of course, let's hope that 2026 will be the best year so far for us. So we're super excited. Lots of new projects in the making at Trading Indicators, lots of ideas. Lots of motivation, yeah, to once again come up with awesome tools, new ideas, new features, and of course, better trade setups. All right. So with this, let me guys ask you, where are you guys calling in from? I myself calling in today from beautiful and hot Brazil today. That's my last day here. I'm heading back tomorrow to Montreal, to cold Montreal. Nicholas and Homa, they are back in Montreal. They told me, oh, it's freezing over there. So I'm not sure if I'm looking forward to it, but no, of course I do. It's always nice to go home. So yeah, I did spent my Christmas time in Germany with my family there, and then just soaked in some sun here in Brazil. And now, yeah, heading back to Montreal. But where are you guys calling in from? Who do we have today? We have Keith from the Scottish borders near England, and Keith says Happy New Year. Perfect. Yeah, same to you, Keith. David says Happy New Year to all from Delaware. Hey Dave, thank you for that. Ella, same thing. She says Happy New Year, best wishes for 2026, and she's greeting from Hamburg in Germany. Thanks, Ella. Ed is greeting us all from I don't know from where, but he says Happy New Year and yeah, continue the great education. Perfect, we will do. Masa from Montreal. Masa, you're in Montreal now? Did you move over? I know you've been to New York City for the most part, but if you do, yeah, yeah, it's always nice to have somebody from Montreal in the room. Linda from Orangeville, Ontario. She also says Happy New Year. Perfect. Andreas from Mainz, Germany. Mainz is near Frankfurt. In case you don't know where Mainz is. Yeah, thanks, Andreas. Bruce from Tempe, Arizona. Hey Bruce, how's it going? Fabian from Hanover. Hey Fabian, how are you? Arthur from Wernigerode in the Harz Mountain. Yeah, that's it's near Berlin, a bit south of Berlin, southwest of Berlinish. Well, maybe not exactly there, but somewhere not too far away. Aubrey from Cyprus, glorious Cyprus. All right, thanks, Aubrey. And Ed says he's from Virginia Beach. Thanks for confirming this. And we have Art also from Maryland. How's the flying weather down there, Art? Um, Art works for JetBlue. That's why I like to ask. Yeah, I am. I've always been fascinated by the world of avionics, so that's why I like to ask. Lenny from New York City. Hey, Lenny, how are you? Mike from Düsseldorf. Hi, Mike. How are you? Good to have you. Happy New Year. Frohes neues Jahr, as you would say in Germany. Nestor. Hey, Nestor, how are you? From I don't know where are you from, but he says Happy New Year. Perfect. And we have GP who also says Happy New Year. And Master said, oh, she's visiting family in Montreal. Got it. And we have Robert from Bavaria. He says Servus. Awesome. Well, thank you guys so much for uh, sharing your location with us. Let's get started the first session of the new year. Let's see what has happened so far. Okay, now of course, what we'll do today is to look for swing trades. That's always the objective when it comes to our live scanning session every Saturday. And just a reminder, a swing trade typically, it's not written in stone, but typically lasts between 1 and 20 weeks. So it's not a day trade, which you would open and close within the same day. And it's also not a super long-term investment, which you may hold for your entire life or for many years. So it's right in the middle of these two extremes. And the cool thing about what we're going to do today is this can be accomplished in just a few minutes. This really was our main driver behind developing our liquidity view dashboard. A dashboard should simplify your trading and should make things very fast for you. So the idea is that whenever the market closes at around 6 p.m. Eastern time or perhaps in the morning, you open up the dashboard, you look up your scans that you're interested in, and within seconds and very few minutes, you can find interesting symbols, which you may want to consider when the market opens at 9:30 a.m. in New York. So we call this the 30-minute strategy, but oftentimes it's even less than 30 minutes. And the reason why this live scanning session lasts for 1 hour or even more is because I talk so much. But if you wouldn't talk so much, you could do these steps in just a few minutes. Trust me on that. All right. Also, in case you don't know who we are yet, we are tradingindicators.com. My name is Daniel. I'm the guy here on the left-hand side. And together with Homa, she's in the room today too, we have created Trading Indicators about 10 years ago. Time really flies. And then about halfway through our journey, Nicholas has joined us. He's also in the room today, and he'll be helping out with the questions that come in. And as our name suggests, Trading Indicators was primarily designed and created to, innovate trading indicators. Yeah, chart indicators, which you typically put on your price chart, and they will show you something which you cannot see or which are very hard to see with the naked eye. This is how we started, and we've seen it all. We've developed trading indicators for various platforms, for TradingView, for Thinkorswim, for Modifave, NinjaTrader, TradeStation, MetaTrader, MetaStock, and so forth. So we've seen it all. We've built thousands of these indicators, and most of what these indicators are all about is what's called technical analysis. But then we thought, okay, it's nice to have indicators, but what you really also want, especially if you're not fixed on one particular symbol and time frame, what you really also want is to be able to find interesting setups within a big universe of symbols. For example, the stock market. There are thousands of stocks that you could possibly trade, but as it turns out, only a few of them, only a handful of them currently may have interesting setups. Then the question comes, how can we find these setups? Well, the answer to this is you would use a trade scanner, a setup scanner. That's exactly why we have developed our Liquidity View dashboard. It's a trading scanner. It's a setup scanner allowing you to pinpoint interesting setups within thousands of stocks. It's really for finding the needle in the haystack or the diamonds in the rough. How this will work and how you could use this trade scanner and setup scanner, we're going to discover today in this session. Of course, the idea is to, find the most interesting swing trades for the week and the weeks ahead. So which ones have become relevant right now, this second. And of course, last but not least, please make this session your own. If you have any questions, don't be shy. Put your questions into the Q&A box, and Niklas will look out for these questions and bring those to my attention as we proceed through this presentation. All right. I also need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get started. But just one more thing, actually a few more things before we get into our market overview, a few more things. So what we're going to be doing today is to interactively scan for interesting trade setups using our Liquidity View dashboard. It would be best and most educational if you would follow along. And you can do this even if you don't have a subscription to our dashboard yet by signing up for a 1-week free trial for our dashboard. And all you need to do is to go to tradingindicators.com/view. That's the link here, Nicholas. Please put this link into the chat box. So tradingindicators.com/view and sign up for a 1-week trial. And the cool thing is that you will get instant access. This will take less than 1 minute, I promise you, and you can use the dashboard and you can follow along what we do here. All right, so that's step number 1. Then also we have recorded, and soon we will need to re-record it because there are so many new features in our dashboard, but we have recorded about 1 month ago, give or take, a comprehensive bootcamp on our Liquidity View dashboard, explaining all the many features that are built in. Why am I pointing this out? Well, because today, of course, we only have 1 hour time and we're only going to look at certain setups. We will only use a relatively small subset of the features of the dashboard. If you want to know and learn what all the other features are all about and how these features could help you with your trading, check out this bootcamp. It's very comprehensive. It's 2.5 hours long. yeah, maybe something you can do before you go to sleep. Just check it out. Learn about all the many features and how you could perhaps take advantage of them. And this link is also in the chat. So Niklas, please put tradingindicators.com/bootcamp into the chat as well. All right. And there's a question coming in. Is this dashboard available for NT8? No, Juan, this is a standalone solution, a standalone dashboard. It is not connected to any of these mainstream trading platforms. And the beautiful actually that makes this dashboard so unique. You can just open it up in your web browser. You don't need to have NinjaTrader or TradingView or Thinkorswim installed. It will run just in your browser. All right. So we also have a Discord channel, which we plan to, you know, use more extensively even in 2026. Please check it out at tradingindicators.com/Discord, where we frequently plan or publish some trade ideas, even on the day trading time frame, but also on the swing trading time frame. So tradingindicators.com/Discord for that. And lastly, we do have an ebook which we invite you to check out. It's completely free to have. It's called The Power of Three, which focuses on the three setups that we will be using and looking at today to find interesting swing trades. So it's called The Power of Three, and the link is down here. Niklas will put this link into the chat, for you to download. And lastly, if you have any feedback regarding our dashboard or really any of our trading tools, please don't be shy. Share this feedback with us. We'd love to hear it because this is what really drives the further development and improvement of our tools. And most of the features which are now in the dashboard, they have been directly influenced and inspired by your feedback. So please continue to do so. There's no bad comment. Any feedback is valuable to us. So please share your feedback with us.
All right. Daniel.
So yes, Niklas. Hi.
Before you get started, maybe you can answer this question, please, from Anonymous here. What's the difference between swing trading and momentum trading? What's the distinction?
I'm not so sure what momentum trading would be all about, but swing trading really relates to the duration of how long you would hold your trade. So we say between 1 and 20 weeks. So it's not really a super short-term trade and not like a super long-term trade. It's right in the middle. So typically that's what people refer to as swing trading. Momentum trading, I think, is a really overloaded term. I'm not sure how to define it. But when I mentioned swing trading, I was talking about the duration of your trade.
Cool. So momentum trading is definitely like a strategy, taking maybe the trend or something like this. But yeah, swing trading, Anonymous, is just the duration.
That's right. Yeah. Perfect. Yeah. So you probably can have some momentum strategies within a swing trading setup. So I think these two things, they're not mutually exclusive in that sense. They just look at different things. All right. So let's start with our market review. So what has happened since we had our last scanning session, which was, I believe, 2 weeks ago. So let's switch over to our dashboard. There we go. And let's start with the SPY, the ETF that tracks the S&P 500s. We're going to open up this chart here. And let's see what we see. Well, I mean, it pretty much looks exactly as it always has been looking for the SPY from the last 6 months. Price is just slowly grinding higher and higher, but there are some breaks within that price action. One such break, or a phase where prices have pulled back a little bit, is where we are right now. So prices reach an all-time high in the SPY, the symbol here on the daily time frame, on December 26th. You can see it here. Price, grinded up towards this resistance level here, but then we bounced off resistance, which happens frequently. We have this bounce off resistance, and prices pulled back a little bit. Most notably on Friday last week, where we had a fairly sizable down candle, and actually I used that chance to sell some puts on the SPY and the expectation. All right, this uptrend is eventually going to continue, and these puts will lose on value, and I can buy them back cheaper and profit in the process. So that was on Friday, and on Monday. Sorry, that was not Monday. When I said Friday, I meant December 31st. Sorry, of course not Friday. Sorry for that. That was on Wednesday. I got my days wrong. This is what happens when you are, traveling on holidays. You confuse the weekdays. That was on Wednesday. Then, of course, Thursday, the day was off. It was the New Year's Day. And then on Friday, we had kind of a indecisive day where we closed a bit higher, where compared to the close of the off on Wednesday. But nonetheless, this is just a regular correction in my view within a very stable bullish uptrend. And if you look down here at our trend radar indicator, what do we see? Well, we see it's only a level 2 pullback right now. It was a level 3 pullback on Wednesday, but these are very common occurrences. And you can see they even happen almost, in constant intervals. If you look at all these pullbacks here down at this indicator, let me just make this a little bit bigger so we can see it a bit easier. Every, I don't know, 2 weeks, 3 weeks, we have a bit of a pullback here and here and here. It's like it's a nice repeating theme. And it's exactly what's happening here again. Yet another pullback. And so far, at least in the last 6 to 8 months, every such pullback was a great opportunity to look at long positions or perhaps to add to your existing long position in the SPY in the expectation, okay, prices will continue to grind higher and eventually this pullback will lead to a resumption of the overarching bullish trend. All right, so that was the SPY. We're right at this resistance level here. It may take a couple of attempts to break it, but I'm positive and very confident that eventually we will break the all-time highs in the SPY. What about the Qs? Q. Well, similar, yet not the same. So what do we see in the Qs here? Well, first off, while the SPY made an all-time high on December 26, the Qs were actually quite a bit away from this. This shows a bit of the in quotes the weakness of the technology stocks right now. They're having a bit of a harder time, and of course, it's in quotes. They've been extremely bullish so far, but if you look at the swing points here, the all-time highs, they are already a couple of months back here in October 29. Ever since these swing highs here, they were a bit lower. One would. I'm not saying I'm bearish the Qs or technology, but one could say, okay, we have kind of a descending triangle here. Oh, at least a converging triangle. It looks a bit like this, but nonetheless, to me, this is just a pullback within a very strong uptrend. It's a level 3 pullback as per our trend radar indicator. We have plenty of space, which actually makes this a bit more interesting than the SPY to me. We have plenty of space towards this resistance level here, and to me, this could be an interesting opportunity on Monday when the market reopens to look at some long positions or perhaps sell some puts depending on what the volatility looks like. In the expectation, okay, the Qs, they will eventually continue their upwards move and approach this resistance level here at 636 at the minimum. All right, what about gold and silver? Also two very interesting symbols for an kind of similar situation. So this is gold. Gold broke above this resistance level. You can see this resistance zone here at around 403. But what's interesting here is how it broke it, how this level was broken. So I'm going to draw this here just to make this very explicit. I'm going to actually take off our ME rush indicator for a second because we know anyways gold is bullish. So what do we see here? Well, where's my drawing tool? There we go. Okay, so we broke this resistance zone and we can see it here. There was a bit of a gap. No doubt about it. We gapped up towards that level. And guess what happened subsequently? Well, this gap was filled. And this was a bit, not surprising because we know that gaps tend to get filled many times. We even have an indicator that would show you. Nicholas, maybe if you have a second, see if you can find this gap in our gap IQ indicator on TradingView and see what is the historical fill rates of gaps of this size or bigger. When they are up gaps. Maybe it's something you can quickly take away. So you can see we gapped up. And later on, our price made an all-time high. We can see it here on December 26th. But then the gap down. And guess where we stopped? Exactly when this gap was filled. So to me, this was a move to fill these gaps. I believe many people booked profits at that point towards the year end in gold. And also, I also believe that gold will continue its bullish move in the medium to near term future. So I'm not concerned. It was a level 3 pullback 2 days ago or 3 days ago, and now it's a level 2 pullback. So I believe this is just a pullback within a strong uptrend. Silver. Silver is also interesting, but for different reasons also. Once again, different reasons. The setup always looks a bit similar. Yeah, it's like bullish with a pullback. But look what happened here. Also interesting. Here, we also pulled back. In fact, this was quite a bit of a big candle all the way from here down here. I think we lost like 5 or 6% in silver on that day. But since silver was so bullish over the years, look how green this entire area looks like in trend radar. This gives you an idea how bullish silver was. Even with this pullback here, it was only a level one pullback in trend radar, which is very shallow. It's the shallowest, or the most shallowest, whatever, most shallow pullback that the trend radar indicator can pick up. So this move down was only level one on trend radar. So we are still very bullish. We're still very extended. And in silver, I would not be surprised if we see a bit of a deeper correction. It's definitely overdue. Yeah, look at how long it's been since we had a level three pullback on silver. So if you want to be prudent, you would wait for a deeper correction. The question, however, is will this occur anytime soon? Last year, this is why I saw this little purple box here, or we put this purple box here. I told you guys, maybe wait patiently for a pullback towards this broken resistance level. Not the best advice at that point because prices just never came back there. But this is just the approach that we're taking. We patiently wait for everything lining up. And of course, sometimes you will miss an opportunity. As in silver, it's in silver here, but you know, obviously there are always interesting opportunities since we can scan through thousands of stocks. All right, so that was silver, but let's look at one more symbol, which is Bitcoin, BTC USD. There we go. Yeah, so Bitcoin, surprisingly, it was very calm over the holidays. So we saw bigger moves in silver and gold. Also the SPY and the Qs, we had bigger moves, but Bitcoin, look at this price action here, super flat over the holidays. Not sure what's the deal with that. You would think of Bitcoin and would also move quite a bit. It's not the case. It was flat. I still believe there is a chance that this, a little consolidation will result eventually to a deeper move down towards this level here. Maybe it will just take a bit longer towards the level around 74, 73,000. We're not out of the woods yet. That's why I personally am careful with adding to my existing Bitcoin position right now. I will wait to see what happens next. Either we break above this resistance level here, this intermediate resistance level at 94, that I believe the bulls will be firmly in control again, or we see another leg further down towards the 73, 74,000 level. So here I'm just going to wait and let the market decide where it wants to go. All right. So, Nicholas, do we have any questions that came in, or can I move on with our review of what we picked last week?
And just for the gold Gap IQ thing, I'm actually on a computer where I'm not logged into our accounts
Okay.
for the
No
2FA.
worries.
But
We'll we'll
so
we'll look at it on our lunch and on Tuesday. Yeah.
perfect. Okay, yeah. So GP wants to know, can liquidity IQ, one IQ, or any combination of those indicators be used effectively without this dashboard?
Oh yeah. Oh, absolutely. So we use the individual indicators on TradingView, for example, or also on NinjaTrader all the time for our trading. Uh, so this dashboard is for swing trading to begin with. So if you want to do any kind of day trading, you would need to use our indicators, our individual indicators on a trading platform like TradingView or Waterwave or NinjaTrader. And yeah, we always use it there. We like the scanning part of the dashboard, of course. This is the purpose of this dashboard to be able to scan for these setups. But if you're trading more frequently, or if you perhaps don't have access to the dashboard, you can use these indicators just as well on TradingView. Just will not be able to scan in the same manner as we do it right now.
Yeah, and with one IQ, I'm guessing GP has one IQ. There is some scanning capacity there on TradingView. That's one of the big benefits of it. And David wants to know, do you know what percentage of stocks who enter a support or resistance zone go on to break through that zone?
Yeah, that's a good point. It's on our to-do list to get these statistics. We don't have them right now. But that's the question that we asked ourselves as well. And we are working on something like this. We don't have a date for it yet. We're just doing the groundwork. It's actually not an easy thing to sort out and to calculate. It may sound easy, but there are lots of things that you need to consider. Because what you said, David, is that, okay, how many how many times the bounce happens versus a break? All right. So then you have to think about, okay, what is really a bounce? So do you need like a bounce of a level like all the way to down to the next support level, or perhaps just a bounce of a couple of percent? So all these things need to be worked out because you not only need to have an entry for your trade, but also an exit. So Lots of variables, but something we have asked ourselves as well. Absolutely.
And last question, Daniel, thank you. Um, for the S&P 500, you can please go back to that chart. If you
Yeah.
traded that current pullback, how would you know when to exit?
I mean, for me, it's very easy. If I 'Cause I typically I sell puts. I just collect the premium, and I just buy these puts back when they have lost most of their value. Maybe they lost 80% of their value or 75%. I naturally just close it out because then it doesn't, I don't keep it anymore. But if you are, I mean, I also have a strategic SPY position, which is just buy and hold basically. But that's for a different portfolio. I believe the SPY is, you know, it's one of the most secure ways to invest because if you can hold on to it over time, I mean, so far it has always recovered and made all-time highs. So every deeper phase, even really bearish phases, they eventually came to an end and the bulls took over again, if you can hold on to it for that long. Uh, but if you're a swing trader, what I would do in this particular case, I would just be careful. Um, because we have resistance right here. So I believe prices will revisit resistance up here in the next couple of weeks. And then I would probably just get out when prices go here just to protect myself from a swing trading point of view. And then if you see a break with this level, that's a whole new story, a new different setup. Then we can play the breakout move. Yeah.
Thank you, Daniel. And maybe one day, Lenny's saying, could you explain your different portfolios and your rationale for each?
Yeah. I mean, so I think everybody should diversify in probably in similar manners that you have portfolios which are really long term. Lots of buy and hold strategies would play into this. So that's definitely one portfolio that which I have, and then I have one for swing trading too, which it's more on the speculative side. It's really trading, it's actively trading, not just buying and holding. You want to trade, you're going to use options for this. It needs to be a different account and a margin account where you can sell options as well. Lots of my strategies they are based on selling options, so that requires a different portfolio of different potentially with a broker which allows you to do it. It cannot be, at least not in Canada, it cannot be a registered account. So there's a lot of things that play in. That's where I use that for. And then we also have our day trading portfolio. Right now it's flat, but we use it all the time for our new one IQ indicator, for example. And by the way, our next day trading workshop will take place on, maybe I'm wrong now, either Wednesday or Thursday the next week. Super excited for this. All right. So let me quickly have a look at what we picked not 2 weeks ago, in our last swing trading session. So I'm going to go here to our watch list, which we created 2 weeks ago. It's the weekly swing trades from December 20th. And if I click on it, you can see that we had, you can see it down here, 7 picks for that week. And let's see how we fared. So I'm going to start with Broadcom. All right. And Broadcom, I believe, was also our trade of the week in our newsletter. Yeah, it worked out so far quite nicely. So when we saw the setup, prices were down here at this support level. Of course, Broadcom is a very bullish symbol, and the expectation was, which worked out very nicely, that we are bouncing off this level towards higher price levels, which has happened. That's great. So we're in good shape in Broadcom. Big, a huge company, even better. Long-term bullish stock, 1,263 trading days. Look at the bounce we had here with a beautiful follow through bounce of this level with a liquidity capture. Nice bounce to the upside. Now we're trading exactly in between support and resistance. That worked nicely as well. The CISO Environmental Corp. What was that? Oh, that's a nice one too. Here we looked at an entry. It's been hard to see at this surprise where they went up a little bit already. We looked for price to come down a little bit towards this broken resistance level, which would now act as support. Didn't happen, but if you jumped in right away, prices came up a bit, now coming down a little bit, but this setup looks good so far as well. Then the DT Midstream Inc., DTM, let's see what happened here. I think this was a beautiful trade as well. Yeah, so this was a zone break retrace trade. We didn't really get there. This is always my problem that, I really want prices to come down to the entry point I really want to have. I don't want to chase anything. We didn't get there, but if you jumped in earlier, you saw a nice development of the symbol as well to the upside. And Then we have the Templeton Emerging Markets Fund. Yeah, look at this beautiful move here. Yeah, right off support down here. That was 2 weeks ago. Moved upwards. Now we're at resistance. So far, so good there. Then we had Interdigital, IDC. See, that one is, yeah, nothing really happened there. We bounced a little bit off the support level. Just zoom out a little bit. And now we're back in the soup right at this level. So pretty much at break even for this symbol. And then we had O'Reilly Automotive. That, yeah, here also not much has happened. We did see the bounce. You can see it here. That was the bounce we saw. We came up a bit, but then we retraced again last week. And now we are right at the support level with a liquidity capture, maybe another opportunity to go long O'Reilly. So we did fairly good so far on our picks. We did actually really good on the picks from last week. So let's see if we can repeat the same performance with our picks for this week. And Charles is asking a question: what does this number on the right-hand side of our liquidity IQ setup mean? Column means this is the duration for how many trading days a symbol has been in the setup. So, for example, let me take this one here. Broadcom. Broadcom just entered a magnet zone 1 bar ago. So this is when we had a magnet zone here. Before this was not in magnet zone territory. CISO broke above resistance 17 bars ago. It was down here. If you count these bars, 17 bars ago from here, we broke above resistance. Yeah, short bounce. DTM for 2 bars now is trading near resistance up here for 2 bars. So it shows you the duration of the setup. That's what it means. All right, perfect. So now, of course, we want to find interesting setups for the next week. Now, let me quickly go back to my slides to look at the setups that we typically consider in this scanning session. I'm going to start with my favorite one. So what do I like? Well, first of all, what we're going to do right now is we're going to focus on one setup at a time. So we're going to go through these one by one. And if we see something of interest, we will add it to a hot list or a watch list, which I will share with you. And then at the end, we're going to go through this hot list to see which symbol perhaps we like the best. So that's what we're going to do right now. Now, what do I like? Which setups do I like? Well, first of all, today we're going to be looking for bullish setups. Typically, that's what we do. Typically, we are looking through stocks and ETFs, and oftentimes these have an upwards bias, a bias to the bullish side. And the trend is your friend. Why not trade with the bias than against it? So we're going to trade with the bias. We're going to look for long setups right now, and only in the scanning session. You can look for short setups using our dashboard. That's no problem. It's not something we're going to be doing in this particular scanning session today. All right. So for long trades, I want to trade with the trend. The trend is your friend until it ends, of course, but oftentimes the chances, the odds of the trend to continue, they are simply higher than the odds of the trend to reverse. So if these chances are higher that the trend will continue, why not put these chances into our favor? Why not trade with the direction of the trend? We're going to exactly do this. We're going to find stocks which are indeed in long-term bullish trends because we want to trade long. So we're going to trade with the trend. So long-term bullish is going to be one criteria for us. But of course, as a trend trader, as somebody who trades with the trend, there are good times to enter into a trend trade, and there are not so good times. And of course, hindsight is 2020, but one not so good time to enter into a trend would be right away up here. Now, when prices are really extended, or here when prices are really far away from the averages. This is not really when I want to enter into a trend trade. Why? Because the chance of a pullback, they're quite high when prices are so extended. What I want to do is I want to patiently wait until prices actually pull back. And we have an indicator for this, which shows us exactly this. It's called our trend radar indicator, which allows us to see, okay, right now prices have pulled back. We call this a healthy pullback, where at least 3 levels are red of our trend radar indicator, and at least the last one is still green. This is what we call a healthy pullback. So this is what I want to find. But this is not enough because there's one more criteria. Ideally, I want this pullback to coincide with a key support level, because then we have multiple things stacked in our favor. We have a bullish stock with a trend it's likely to continue. We have found a stock which pulled back, which gives us a much better entry price. And this pullback coincided with a support level from which we might bounce off to the long side. This is what I would like to find. So how can we find these stocks using our liquidity view dashboard? Well, it's really easy. Let's check it out. So I'm going to go back to our dashboard here. There we go. And I'm going to go back to all the symbols that our dashboard has to offer. Right now, it's 5,786 symbols. And I'm going to start by identifying those symbols which are currently bullish. So, of course, not every symbol is bullish. You can see it here in our MA Rush column, which is our trend column. You can see some of those have green arrows pointing upwards, and other ones have red arrows pointing downwards. What I want to do first is I want to focus on the symbols which are currently in an uptrend, which have a green arrow pointing upwards. How can I do this? Very simple. I'm going to go to the filter icon to the right of the MA Rush column. I click on it and I select bullish. Once I do this takes a blink of a second, you can see that now every single symbol in our scanner has an upwards facing green arrow. Oh, all right, so that's step number one. And let me just click on one of them. Let's say Alcoa. All right, we can see here, okay, Alcoa is in an uptrend. And we can also see this, well, clearly it's going upwards, but also our MA Rush indicator, which is this one here. See this one I'm flashing right now? That's the indicator which determines whether we are currently bullish or bearish. And the indicator does it by means of these labels here. You can see this bullish label, meaning, okay, this symbol right now is in a bullish trend. And these labels always alternate. So a bearish trend goes into a bullish trend, which eventually will alternate to a bearish trend again. So these are always alternating. And depending on what the last label on our chart is, this determines what is the current trend direction. So right now the last label is bullish, meaning Alcoa currently is in a bullish trend. All right. One more thing about these trends is, if I were to count the candles from the last candle on my chart all the way back to the candle which has this label here, I would get to exactly 51. So I didn't just count these up in my head quickly. No, I was just looking here at the number to the right of this arrow. It says up arrow 51, meaning that MA Rush, our trend indicator, switched from bearish to bullish 51 trading days ago. This is what this number tells you. Let me find another one. This one here, American Airlines, AAL, up arrow 25. You can see this bullish label here is much closer to current price because it switched over 25 hours ago. Now you can even, let me just find a really crazy extreme here if I can. 2 hours ago, Excel or Excel Entertainment, 2 hours ago, it switched to bullish. You can see it here. All right. So this is how this works. Okay. Step number 1 is done. We have found all our bullish symbols. Step number 2 is we now want to find symbols which currently have a level 3 or level 4 pullback as per our trend radar indicator. Meaning we want to see the first 3 of these rows red and the last one's green, or the last 4 rows red and the last one green. How can we find this? Well, we're going to go to our pullback column here, this one, and select show me all the ones with a level 3 or level 4 pullback. Great. And now, once I click on my symbols here, like AIT, we can see, okay, AIT is bullish, actually for 1,297 trading days. That's a really long time. And currently it pulled back 3 levels. You can see it in our trend radar indicator. The first 3 rows are red. The last 2 ones are green. So I zoom in a little bit. 1, 2, 3 are red, and the last ones here are green. But there's one more criteria which we wanted. Who remembers what that criteria was? Right. We wanted price to coincide with a key support level. Is this the case right now for this symbol here, for Applied Industrial Technologies? Is price near support right now? Absolutely not. Support is down here, price all the way up there. We are nowhere near support. In fact, this one, actually, we are close to resistance, so I'll be careful going long here. I would like this pullback to coincide with this red level here on the chart. So how can we find this? Well, this is where our liquidity IQ indicator comes in. It's this one here, which shows us these support and these resistance level. So it's this indicator here. Let me just flash it real quick. You can see it here. That's the indicator which shows us these levels, support and resistance. Now, the cool thing is with our dashboard is that we actually have a scan column based on this indicator. It's got the liquidity IQ setup column, this one here. And if we open up the filter to the right of it, we can select the filter called long bounds, this one here. All right. And once I do it, we can see, okay, all right, of our 5,786 stocks, currently only 17 stocks or symbols are in such a scenario where we have a level 3 or 4 pullback, we are bullish, and we are near support. Let's check it out. Like AGG, iShares Core US Aggregate Bond ETF. All right, let's see what this one is all about. Let me just go quick, zoom out a little bit here. Oh, it's a bit of a crazy symbol. Put this back on. I can see, all right, it's definitely bullish. We went bullish here in July last year, and now we're at key support. Would I trade it? Probably not at this level. We have not much space to resist, and I'm probably going to skip this one. Okay. All right. What about this one here? The AVAH, Healthcare Holdings Inc. What about this one here? Let's check it out. Yeah, more interesting. Bullish trend, and we pulled back to a key resistance level, and we even have a liquidity capture at the last bar. That could be an interesting one. I probably also would not trade this one just because it's a bit too gappy, and there's a huge gap down here. You can see it here, which hasn't been filled yet. So I'm probably going to stay away from this one as well. But you get the idea of how we can find these potential candidates for potential long entry when the market opens on Monday. All right. And there's one more thing I like to do is I like to sort my remaining symbols in my scanner here by trend duration. I can do this by clicking on this MA Rush column here and sort from highest to lowest. We also already looked at
Daniel,
Vena Healthcare. Yes.
this is actually perfect time for this question. How long term? So you said you could sort it by duration. How long do you want the duration to be to consider a potential trade in that direction?
Oh, to me, I don't really have a threshold for trend duration. What I want to see is that the uptrend is well established. So, but this is a bit of you kind of have to look into each chart individually to get a feel for, okay, this looks like a really stable uptrend. Let's just check out this one here for ESE, the ESCO Technologies Inc. Let's check it out. So what do we see here? Well, to me, you know, uh, I mean, just by eyeballing this one, that looks like a nicely well-established trend. So definitely something to consider. In fact, I'm going to use this one as our first hit for today for our watch list, a potential long entry. This symbol here, the ESCO Technology Inc. Why? Because we were bullish. We pulled back 4 levels, level 4 pullback, and we are right at the support level. And the last bar even as a liquidity capture event. So let's add this one to our watch list. All right, so what I'm going to do now, I'm going to, first of all, create the watch list for you. So I'm going to go down here, create. Okay, weekly swing trades, column 2026. Yes, January and the 3rd. I'm going to create it. All right, and I'm going to add this symbol to this list. Just go down here. And what I'll also do is I'm going to share now this list with you guys. Oops, wrong. I'm going to go down here. I'm going to share this list. It's this button here. I only have this button because I'm an admin of the dashboard. And I will unshare the watch list that we created 6 sessions ago, because what we're going to do is we share the last 5 watch lists with you to not overwhelm you with all these watch lists. I'm going to unshare this one. Done. Okay, can I see a demonstration of how this works? I'm not sure what this relates to because it's a very broad question. Maybe be a bit more specific, whoever asked that question. All right, so now I'm going to add this. Oh, I already added to this watch list. Perfect. That's our first hit for consideration when the market opens on Monday. Moving on. The Euroseas LTD. Okay, let's check it out. Bullish for 575 trading days. We are near support and we have a level 4 pullback. All right. All right. So let me have a look. How does this trend look like? Just go back a little bit. Yeah, nice bullish trend. There's some bigger pullbacks here. Somewhat like a pullback we see it right now, but nonetheless an interesting one with a liquidity capture 2 bars ago. So I'm going to add also this one to our list for consideration. So right click, add to this watch list. Oops, there we go. And I should clean up my watch list a little bit, perhaps at some point. Moving down, the UVE, the Universal Insurance Holdings Inc. Let's check it out. Okay. Bullish for quite some time. Just go back a little bit further. I always like to zoom out a little bit just to see how this trend behaves or tends to behave. I believe that patterns will repeat themselves quite a bit. I just want to see how smooth that trend is. And it's not the smoothest trend. Ever since we went bullish here on November 17, 2023, it's quite, there's some bigger moves involved. So this definitely would be one of the more risky trades to consider. Also because we do have, you can see it here, but quite of a sizable gap on October 23rd to October 24th, probably an earnings gap, which has not been filled yet. So here I would be a bit careful. Nonetheless, it looks like kind of an interesting setup, but just be aware that we do have this gap. Then, if this gap gets filled, yeah, we may price may pull down all the way to this former resistance level here at 28.50 around. In fact, for this reason, I'm going to skip this particular setup because I think it at least feels to me that prices may come down all the way to this level in an attempt to fill this gap. So I'm going to skip this symbol. All right. Perhaps one more, the an Australian stock here, the Harvey Norman Holdings Limited. Bullish of 505 trading days. Okay. Oh, huge gap here. So I'm probably also going to shy away from this one. But you can see how easy it can be to find these interesting setups. I'm going to skip this one just because we have this big gap here, which may get tested. And if it does, prices would need to come down all the way to this level. All right. Now, this was our first setup. But now I want to share something with you because sometimes one of the conditions which we have entered into our scanner here is a little bit too stringent, and you may miss out some of the other interesting setups, some stocks which have a really interesting setup right now. Guess which is the condition? What's the condition here? If you want to voucher any guesses right now, yeah, it's this one here. It's the pullback condition. What does this pullback condition do to us or for us? Well, it basically tells the scanner, okay, find me all these stocks where the pullback is still considered a healthy pullback. We still always need the last row here in trend radar to be green to show up in this pullback column. But sometimes by doing this, we are filtering out stocks which perhaps have a bit of a deeper pullback, yet they are very interesting trade ideas. So what I suggest is you remove this filter just to see what's out there. So I'm going to remove it now. We're still sorted by trend duration. And let's see some of these stocks which you can see here. And the first one that comes in is Climb, the Climb Global Solutions Inc. Let's check it out. All right, so what do we see here? Let me just zoom in a little bit. That's a stock which has been very bullish in the past. You can see what a big bullish parabolic move. It came all the way down here towards the support level, and up again to resistance and down all the way again. And I do believe that this could be, in fact, an interesting long opportunity, but I would like to see prices to come down maybe a bit further. We had the stock here when it came down to this resistance level, but maybe I want to wait till prices come down all the way to this level here to potentially look for a long entry. So I'm going to skip this one for now too, just because I think this move down may end up only at this support level down here. All right. Okay. Oops. Then we have the next one, the O'Reilly Automotive Group. Let's check it out. This used to be a very expensive symbol, but then they had a stock split, 10-to-1 stock split, which makes it, of course, now much more affordable. Look at this setup here. It's not a healthy pullback considered because everything in trend radar is red, but nonetheless, that's an interesting setup. Why do I say this? Because we are, of course, very bullish in this stock, and I believe this could just be another test of this support level before these overarching long-term uptrend continues. I'm going to add this one to our watch list. And I was able to do this because I removed this filter condition where we don't require the pullback to be only level 3 or level 4. All right. Next one, Cintas Corporation. Ah, it's a bit of a bittersweet stock for me. I believe what we're seeing right now in Cintas is simply the lower end of a sideways phase, which this stock has entered. You can see it here, how bullish it was. Huge bullish move up. And ever since this high point here in November 2024, it's been in a sideways consolidation. We came down to support here, up to resistance, down to support. Now we're once again down at the support level. I actually own the stock outright. I got assigned, I sold some puts when prices were, that's one of my yeah, not so well performing stocks in my swing trading portfolio. I sold some puts back here around 2000, the 210 level. I got assigned, so I now own the stock outright, and I will now patiently wait until the stock will come up again. I'm, owning this stock. I'm not going to get rid of it. I'm going to keep it. And while it's like trading down here, I'm just selling calls along the way to collect a bit of a premium. In fact, I just bought some calls back when prices came down on Friday a little bit. I bought them back for a much lower price, made a bit of a profit. And so for this stock, my idea is just hold on to it until it will come back up. But I think it's in a nice position now for a potential long entry nonetheless, because we are trading right at this support level here. Perhaps prices will come down all the way to this level, this support level here. If it does, potential candidate for a long trade in CETAs. I'm going to add this one to our list. All right. All right. Okay. So perhaps one more. We already discussed the GPI, I believe, but let's look at it again. Group one automotive, also a very bullish stock. Kind of a similar picture than CETAs. It was very bullish for quite some time, but now it has entered into a sideways consolidation phase. You can see it here. Since this all-time highs here, prices have been alternating down to support, up to resistance, down, up to resistance, now down to support again. I believe potentially this could be an interesting long opportunity as well. Especially since prices are trading right near this support level. So I'm going to add this one as well to our watch list. All right, perfect. Are there any questions so far, Nicholas, or can we move on to our next
Oh,
set
yeah,
of
we got
setups?
some symbol requests later. We just have one question here from um Lenny. For a gap fill, how old do you think it is before you start to ignore it?
Oh, how long? Repeat that, please,
Like,
Nicholas.
how old would a gap be before you start to say, okay, it doesn't matter anymore?
Oh, so it's hard to say. I think every symbol has its own characteristics. And Lenny, what we typically do for this is we use our gap IQ indicator. We check out what are the fill statistics for some of these gaps. So how long, for example, does it take for this symbol on average for a gap to fill or to be tested? And the indicator will tell you this. And from symbol to symbol, these values and these numbers are very different. So I think what you could do is you could look at the average fill time. And if you're maybe I don't know, a couple of years above that fill time, or maybe it's all relative, huh? If you're way past this filter, maybe on some of these gaps which that long ago are no longer relevant. And the other thing, what I would also consider is if that gap is nowhere near where price is right now, it's probably also not so relevant anymore. So I would only consider these gaps which are somewhat close to price.
Thank you. And then last two questions. One here is just a comment from Arthur. So when a stock is a stock split, it'd be nice if we can have the price data updated so that MA Rush and the indicators aren't all screwed up
It
around,
it
the
it
previously high
yeah.
prices.
What Arthur, just real quick on this one. For these kind of events, the dashboard will update every weekend and readjust the prices. So every weekend, so tomorrow, for example, if you have a stock which had a split just recently, it should look all normal again tomorrow. Yeah.
Thank you. And then the next one is, what do you use magnet zones for, Daniel?
Yeah. Actually, one way to trade it is to uh, okay, let me just find one real quick. So a magnet zone is when price is somewhat in the middle, in between support and resistance. So let me just go here to magnet zone. Okay. So for example, this one here, the Newton Golf Company. All right. So we can see, okay, we're somewhat in the middle in between support and resistance. Or let's say this one here, the STG, the Sunlands Technology Group. Price is somewhat in the middle in between support and resistance. So this tells you something because to me, in fact, when a price is really in the middle, I believe it will not be there for much longer. And there are some option strategies which you can use around that principle. For example, the strangle strategy, which is looks for the price to move either to the upwards direction or the downwards direction. And in fact, the reason why we call this magnet zone is because price, at least in the medium term, is kind of magnetically drawn to either support down here or resistance up there. And there are some trading strategies of options that can take advantage of this. And then, of course, what you can also do is you can look at trend. So, for example, let's say I want to set up a strangle for a magnet zone stock, the chemical. All right. Oh, what a nice move. Actually, we had this now as our trade alerts on newsletter a while back. Okay, so chemical is in a magnet zone right now. It's in between support and resistance. So what you could do now is you could potentially look for a strangle trade here, which would buy calls and buy puts in the anticipation, okay, the price is going to move from here. It's not going to stay in this middle zone forever. All right. But sometimes if you want to sometimes you want to give more weight either to a strangle or sorry, to a call or a put, depending on what is the overall bias of trend. In this case, this stock, for example, has been a bullish trend for 1,410 trading days. So maybe you can even skip the put part or perhaps get a much cheaper put just to be protected in some sense if a big move happens, but focus more on the call direction. So this is kind of where we use the magnet zone for. So because the idea is that price will not stay in this middle part for much longer. All right. I hope that clarified this a bit.
Thank you, Daniel.
Okay, so let's move on now to our next setup. So let me go back to my slides because the next setup I would like to discuss, and I can tell you that there will be some interesting setups coming up, is what happens when a zone is broken. So what is when price actually breaks support or when price breaks resistance to the upside? Well, in this case, we call the zone break. So a zone break happens when price, for example, breaks support here and then continues trending in the direction of the breakout. So for example, here we broke support and we went further bearish. But before this bearish move really unfolded, price came, you can see it here a little bit, came back up towards this broken support level because it's the retrace trade. This is something which we observe quite a bit. And oftentimes what we do is we actually wait after a zone break for this retracement to happen. We call this the zone break retrace setup. You can see it here for the bullish case, which is what we're going to be looking up today for our dashboard, where price broke resistance beforehand. You can see it here. It initially went upwards, but then it came back down towards this broken resistance level. It retraced. This is where the name comes from, down to the broken resistance level, which, however, now is acting as support. So we probably have heard it before. Resistance becomes support when it was broken. That's exactly what we saw here. And oftentimes waiting for this moment can be the perfect moment to find a long trade because this initial fake out of the market has already passed. And this is oftentimes when the real move unfolds to the upside in the direction of the original breakout. So how can we scan for this? Well, let me go back to our scan. I'm going to clear out all our filters. And now what I'm going to do, I'm just going to go to our Liquidity IQ setup column here and select long break retrace. And once I do, you can see it right away. Of our 5,786 stocks, only 48 stocks currently have this setup. And the first one that came in is Coca-Cola. Coke. Let's check it out. All right, so what do we see here? Look at this. Nice break above resistance here on November 11. Price initially went upwards and then it came back down around this broken resistance level. You can see it here. And this can be an interesting opportunity for a long entry. I'm going to add the stock to our watch list because here the anticipation is that price, okay, will find support in this former resistance level. It's the emphasis is on former. This used to be resistance. It was broken subsequently, and since then it is now acting as support. And so I'm going to add this one to our watch list as a potential candidate for Monday when the market opens. Next one, the Hartford Insurance Group. A good old companion of us. We've been talking about the stock for quite some time back in the day. Also, here we can see that price broke above this resistance level, initially went up, and now down to this broken level. And also here, I believe that this could be the launch pad for another move further upwards. Although here, one thing to consider is that if you were to take this trade, make sure to give it enough room because we do have a former resistance level here too, and one more support level down here. So there are multiple levels nearby. And sometimes, if that's the case, prices will only find real support at the lowest of these levels, maybe here around 128. So this trade, I believe, would need some extra room. But nonetheless, I'm going to add it to our list. All right. And perhaps one more, the Liquidia Corporation. Bullish of 1,041 trading days. Let's check it out. Yeah, same thing. We broke above resistance at this point here. Price initially went up and now we're down here at this former resistance level, which also at this point may act as support. Let me just go back a little bit further to see where we are coming from here. Yeah, also an interesting trade idea for Monday. But of course, here, we had this big down ball on Friday in the market, the last day of the last week. I would like to see a bit of confirmation when the market opens up. So maybe a bit of a bullish sentiment in the market to see, okay, the bounce seems to be in progress. I don't really want to catch a falling knife. So waiting for a bit of confirmation sometimes can be a good idea as well. I'm going to add this to our watch list nonetheless. All right, perfect. So let me just quickly see what do we see here. All right, so what I'm going to do now is I'm going to go to our watch list and just review the trades that we found so far. We have 8 trades. Let's quickly review them. And if you like what we see, I'm going to add this setup to our trade notes. So I'm actually going to start with our bounce setups. Cintas Corporation. I'm a bit, yeah. So I believe, at least that's how it feels to me, that this is the lower end of the sideways consolidation. I drew it here, the 178 or 180 level. Right now we're at 184. So I believe scaling potentially into a long trade is not the worst idea. But I also would get out of this trade should we go to like 175. I think then we lost this level. The next level below this would be all the way down here. So I would trade this potentially with a fairly tight stop loss, maybe a stop loss around 175, this level here. This would be my exit point if prices continue to go down. But nonetheless, it's potentially it's worth to consider. So I'm going to add this one to our trade notes. So I'm going to click on this trade notes icon here. And I will click on the plus icon and add this setup to today's notes. January 3rd. All right, perfect. Save. Close. All right, O'Reilly Automotive. Okay. Yeah, same thing. I like it. I think this is yeah, a well-defined lower bound of this retracement. I like this for a long stop, especially since we also have a liquidity capture at the very last bar. So same thing. I'm going to open up my trade notes, add a new one, and add this symbol to it. Save. All right, and close it. Next, the Euroseas Ltd. Yeah, what do we see here? All right. Yes, we are definitely bullish. Let me just quickly review it. The only thing I don't like too much about this is the magnitude of these swings. You can see went up here on a huge downwards move. I would not stay in this trade for that long. Now up again. It seems like this swing down, just to looking at the history of the stock, this swing down might go actually a bit further down, because we've seen this in the past before. So I'm going to skip this one for that reason. I think we have better stocks to trade. The ESCO Technologies Inc. All right, yeah, that looks Yeah, very solid uptrend, nice and steady. Now trading at this key support level, definitely a candidate for next week. So I'm going to add this one. All right, save, close. Group One Automotive. Yeah, that was a stock we already discussed. We had this on our radar, I believe, 2 weeks ago as well. We initially came up from this bounce here. Here, I'm gonna wait for this one. Maybe gonna discuss it again next time we have the scanning session because I believe prices may come down all the way to this level here. We're still a bit away from it, so I'm gonna wait for this to happen, then potentially look for a long setup. So we're gonna skip this one. Coca-Cola Consolidated. All right, yeah, I like it for a potential retracement trade. I'm going to add this one. For that, we just discussed it. Add a new trade note, and we're going to add it right here. All right. And Hartford Insurance Group. Also a zone break retrace setup. I'm going to skip this one too, for the simple reason that I believe we have all these levels next to it. Maybe price is going to retrace a bit further down before resuming the upwards trend. So, these pullbacks, they tend to be a bit deeper here. You can see a level 4. If this happens, price would come down all the way to this level. And this is where I would be really interested in the stock. So I'm going to skip it for now. And finally, the Liquidity Corporation. Yes, it's a little bit bigger here. I like it for a zone break retrace trade. We do have a level 3 pullback. We can see it here in the past, at least in the last couple of months. These pullbacks have been bought up relatively quickly, or right getting to the support level. And yeah, all I would like to see here is a bit of bullish movement when the market reopens on Monday to see some confirmation that this bounce is actually happening. But nonetheless, I'm going to add it to our notes. All right. Perfect. Now, are there any questions, Niklas, or any symbol requests we can go to?
Yeah, let's go through symbol requests and the questions tie in. So the first
Perfect.
one is going to be IDCC. So I think this is from a prior watch list.
Yeah,
And would you say the trade has failed or the trade idea, or it just hasn't moved yet?
ID Interdigital. Yeah, let's check it out. Well, I don't think it has filled yet. It's not I mean, we're still right at this support level, so no, it's still a good candidate for a long. I still like it. Yeah.
Great.
No.
Okay, the next one is ITUB, ITUB. And I think this also from a watch list.
ITUB. Yeah.
Arthur wants to know, he's stuck in the trade because of dividend and split influences. Where would you set your stop? Would you leave the current setup? Would you
I
leave it
kind
at
of
the current setup?
I kind of like this one. This is a nice one. I mean, I always like to put my stops near technical levels. But I guess what you did is you had your stop up here where this was a zone break retrace set up, maybe around 744. I mean, I potentially would hold on to this one if they pay good dividends. I mean, we're bullish here. The next technical level would be somewhere around here, 650. That could be a logical stop level right below this the resistance level. Because if this one breaks, we're probably going to go down to all the way to 6. Yeah.
Right. And then the next one, this is a good question from Lenny. If you can go over to AVAH, please.
AVAH. Oops.
Ava. Yeah. And on this one, Lenny says, so there's a gap. I guess that one right back there with the giant green candle. He says that seems to be from or maybe it's the one down there, I guess. He says that seems
This
to be
one.
from a totally different period of time and a different
Yeah.
pattern or trend or market. So
Hmm.
to him, he says, that one should just no longer apply. But, according to something like Gap IQ, perhaps it's still within the average range. So what would you think about a gap like this? Would you just totally ignore it? Or
Yeah,
what would you take?
I think it doesn't have the biggest influence right now because price is actually quite far away in terms of not just duration since this gap happened, but also where we are in price right now. That Yeah, you're right. And it's from a different time. I just didn't like that setup that much because it's like very jumpy, and I'm not convinced price actually gonna stop here at the support level.
And
That was the
if it,
main reason.
yeah.
Yeah.
And if we came down to that green level, the broken resistance there,
Then
if we
it
start to
would
flub
come back.
around there, then this situation
Right.
changes.
Yeah.
Um,
And then Lenny, of course, when it gets really, really interesting, but of course we're nowhere near here is if we actually price comes all the way down here and we actually enter this gap zone. So price come down all the way to $5 here. Then I think the odds of a gap fill or gap testing, which would require price to come down all the way to 390 or something, become really elevated.
Thanks, Daniel. And could you please look at Netflix?
Yeah, Netflix. What did we say about Netflix the other day? We had it discussed it, I think, 2 weeks ago.
I
Oh
actually
boy,
just
it's coming
subscribed
down a
to
bit.
Netflix again. I think they're getting better pricing again, once again, and better offering.
Why were you off Netflix?
Um, I forget, but a couple of years ago I stopped. I think it was some price increase. I was like, oh, I'll get
Oh
it
yeah.
somewhere else. But now they have much cheaper option. Just ads,
Okay.
and they got new shows and stuff.
Yeah. Yeah, I have all the streaming shows. I have Prime, Netflix, whatever. But I'm a different type, I guess. Even though I don't even watch that much TV, but I like to watch it on my iPad occasionally. Then I would just want to just have all the variety. So yeah, I'm a long-term Netflix subscriber. But yeah, I like it. I mean, Netflix did lose a bit of steam from the all-time highs here back in summer 2025. It's a fairly steep retracement. I think it's going to come down towards this level at 82, on this level here, and that would be a great position to look for longs. I think right now it looks like prices wants to come down to this level. If it does, this would be a great place, yeah, to potentially get some long exposure on Netflix.
For sure. And the next symbol is going to be from BAPA, VRRM. So vroom.
VRRM, Vera Mobility Corporation. All right. So bearish. All right. Okay. So prices have been jumpy, to say the least here. Looks like this could be some sort of a sideways consolidation from this all-time high here. Our prices will jump around a little bit, but we are bearish right now, and we are near this former support level, which could now act as resistance. So maybe potential put options here. It's not the worst idea. Um, Anticipating prices make another move further downwards. Would I go long right now? No, but right at the zone here, which may prevent price from going any higher soon.
Thank
Yeah,
you, Daniel. Okay, the next one's going to be a German stock from Ula. She wants to know, can you look at
yeah,
nem.de?
yeah. All right, let's check it out. Long bounce setup. Okay, let's have a look. What do we see here? So here, trend recently, a couple of days ago, changed from bullish to bearish. Let me just quickly see where we are coming from. The stock. I've been bullish since June 2023. Nice move upwards. And now we are right at this support level. Well, the trend has changed, but I mean, we are right at this level and we did have a liquidity capture. So maybe as a last resort for the stock to recover its bullish move, we want to see a bounce at this level. If anything, I would use a small position here just to not miss out if things actually turn around. But if we lose this level, I think the next step was going to be all the way down here. So if you want to
Yeah.
speculate, maybe with options, take a shot, maybe with some calls. Uh, if you lose, okay, then you lose your options premium, but your risk is very well defined. That I think would be a one way to trade this one because we're
I
right at
think,
the support level.
yeah, that's a great idea with options because with MA Rush here, it went bearish. Even if trend does bounce there, it's going to take a couple weeks or months for it to turn bullish again.
Yeah,
It really, it looks like it might range around there for a while if it doesn't lose it in the first place.
yeah.
What's your feeling, Daniel, about trading ETFs versus individual stocks?
Oh, I trade ETFs all the time. I like them. I like the diversification of it. So, you know, I trade the SPY and the QQQs all the time because only to the long side, never to the short side. So all my strategies are related to a long exposure there because I believe over time, the chances that you will actually lose on the long trade, they're very small. At least that's what I believe. But don't take my opinion for granted. But because over time, the S&P 500, they just simply go up if you can hold on to it. So I don't want to do this in a leverage fashion, but if you can hold on to it and wait out some periods of drawdown, eventually the chances are really high that prices will recover. So yeah,
And
I do like
Aubrey
that
makes a
quite a
good
bit.
comment here. He says, remember that there's no dividends or earnings in ETFs.
Yeah.
Um, okay, and the next one is from Aubrey, actually. It's MKC.
McKesson.
And what do you think of
Yes.
this for a short breakout?
All right, let's check it out. Oh, McCormick. Oh, not McKesson. McCormick Company. All right. Yeah. So Yeah, definitely looks good for a short. Well, bearish trend here. We came out all the way to this former support now acting as resistance. True, with this move already has happened a little bit. I do like it. So this is more like a zone break retrace trade to the downside. We broke below support here, then came up towards the former support level, now acting as resistance, and now this could be another move further downwards. But to me, I only trade if short, then only with puts. That's uh, how I would mitigate the risk that come with short selling stock.
Thank you, Daniel. Okay, I think we have a couple last symbol requests here.
Mm-hmm.
So one of them is going to be UNG.
UNG. Oh, okay. United States Natural Gas Fund. Okay. Oop. What's going on here? Where are we coming from here?
I just
Ooh,
confirmed,
it's
Daniel, with one IQ. Maybe Aubrey, you saw this, but on MKC there, it's actually a short power breakout. So it's got
oh
a resistance level and the zone of control above. It's a really high quality setup for a short.
yeah. Woo. Yeah, I don't know. That is, can this be true? It's such a bearish move here, all the way from 140. I never really considered this ETF for trading, but yeah, it looks super bearish to me. But maybe we are buttoning out here, but I definitely would not go along this symbol. So there might be some smaller retracements, but here I probably would wait if we lose this level at around 12. If you have a zone break to the downside, then potentially maybe short it. But um, um, it would not be something I would touch to the trading.
Thank you, Daniel. Can we look at SoFi?
Yeah.
And did we already take a look at USO today?
No, we didn't look at all. I knew there was something missing when we looked
So
at our market
again, John
review.
Ford says USO. Yeah, when you have a chance.
Nice. It's good. It's a new year. I'm still here in the sun. Some of the things slip your mind. I also had in all honesty, a root canal this morning, so I'm a little bit fuzzy in my head because they gave me some medication. Crazy times. Sorry if I digress. I had a tooth thing before I left to Germany 2 weeks ago, and I thought, maybe I go to Germany to a dentist, especially since my sister is a dentist. I actually asked her, hey, can you check it out? I said, I don't have time, whatever. So I didn't go. And then I didn't end up going there. And I went to Brazil and then it was like so holding in there. But this morning got really, really bad. So I finally went to an emergency 24-hour dentist center here in Brazil. And they said, oh my God, Daniel, how could you have taken so long to see a dentist? It was pretty bad. So they fixed it this morning, actually only 3 hours before the session. And yeah, I'm still here. So all good. But I need to do a follow-up in Montreal once I'm back. Anyways, that's so far. Sorry, I digress. All right. Yeah. Um, yeah. So what we discussed a couple of weeks ago to enter when we came here, I think this was from the session 2 weeks ago, would have paid dividends by now. And not literally dividends, but it would have been worked out nicely. Prices recovered from this level for pullback, and now we are all green again. I believe, yeah, this could be the beginning of another move further up. Would I jump in right now? Maybe not, because I like to wait for these pullbacks. But nonetheless, it definitely looks very bullish and so far. All
You,
right.
Daniel. So the next one's going to be USO.
Yeah.
And Kevin made an interesting point here, which I think is actually interesting because a couple of years back, I bought a bunch of silver coins and bars, Daniel, and they've like tripled in value. But
Yeah.
Kevin says, um, China just announced that they're going to be limiting exports on silver and something about them only accepting payment for exports in gold or silver. Potentially, I'm not sure. I haven't read that news, but perhaps silver is going to be spiking up even higher with a bigger short squeeze up to like $100 plus. That would be
Yeah.
really interesting for
I
sure.
heard I heard that too with the rumor of silver hitting hundreds. Uh, it,
Seems
I,
possible.
It seems possible. I find so. What I don't want to do. I don't want to interpret too much into fundamentals because who knows what's already priced in, right? And what is a surprise to the market? Maybe that you know restriction on how much silver is being exported is already priced in right now. But what I like to look at is the technicals, and there I see a pullback in silver, a very rare pullback in recent history, which could be an interesting opportunity now to get into silver a bit cheaper.
And last rumor, Daniel, remember that Chicago CME shutdown? There was rumors at the time, or that was the word that, yeah, it shut down because silver was squeezing up so fast that they needed to
Oh yeah.
reconfigure their
So
plans.
so it was not AC failure.
I highly doubt it. Maybe it was.
Yeah. Okay. Let's look at oil. Yeah. I mean, what we drew here, and this we drew this a while back, and this sideways channel was respected perfectly. Yeah. I believe we had this drawn well, at least 2 weeks ago, maybe even longer. Exactly, this is what happening here. Oil is trending downwards, step by step. But to me, it only really gets interesting once we hit the 60s down here, because then I'll be looking for longs in oil, or potentially all the way up here at 83. But now looks like we're kind of stuck in the sideways channel, but it's a bit too narrow to me. Uh, so shorting it now, maybe not, because we're right at support here. And going long, maybe not either, because we're in this downwards facing channel. So to me, not the most interesting symbol to trade, at least. All
Okay, Daniel.
right.
Okay, and then one last symbol here that I missed because it came on the wave of many symbol requests. This is going to be the last one is GKOS, and then we're
Repeat
all
that, please.
covered.
What's the? Oh,
GKOS. So like a
GKOS.
George
Yeah,
GKOS. There
got
we
it.
go.
Glucose Corporation. All right. We recently switched to bullish. Let's see it here. Yeah, I mean, it's not. Just see what's going on here. So all-time highs back here in the beginning of last year in February. Huge retracement, which actually made the trend change to bearish, but it stopped here at the support level, which is encouraging. And we came back up, trend changed to bullish. You know what? I mean, once again, it's not. Ah, I kind of like it. I like the stair-stepping pattern here. Higher highs along the way, and this bigger retracement. Maybe it's time now for another leg further up, especially since we broke this intermediate resistance level here. Another retracement down to this former resistance level. Maybe this could be the launch pad for another move further up. Yeah, I kind of it's growing on me as I'm just talking about it. So yeah, potential long one, but I of course, maybe with options or with a small position because it's still risky because that move down was quite substantial. And maybe another interpretation could be this retracement up here from the low point. This bearish move was just a retracement in that bearish um, move down. Another leg down is about to happen. So, but you never know. This is what trading is all about, to make an educated decision, but also to manage your risk. So if you were to speculate, maybe with options, very well-defined risk at current levels, anticipating another leg further up.
Daniel,
Yeah,
could you humor us just with one last chart here on Coca-Cola?
sure.
Lenny wanted to know because he asked a question saying, basically asking about retraces and maybe why it happens. And my explanation was price breaks through a level, reaches, unseen prices, people who already held it sell, and then people buy
Yeah.
back. That's oftentimes. What would you call this right now in Coca-Cola? Lenny wants to know, do you call this a fake out? What it is right now?
Uh, I mean, it doesn't really matter how I would call it, because in the end, what the label is of this price move is not so important. What's important is what is your prediction of what will happen next. Um, so what I see here is a very strong move upwards, almost parabolic, and then prices are coming down, which is not surprising because these are the kind of no retracement that we see all the time, especially after strong moves. That's why also I'm a bit careful of silver right now because it has been going up so quickly that if we see any sort of correction, it might be a deeper one too because prices just came up so fast. But here, I think with Coca-Cola, I like the fact that it's long-term bullish, like really long-term bullish for thousands of trading days, for multiple years. So even if this goes a bit deeper, I probably would hold on to it because it's a very long-term bullish stock, which I believe will continue its upwards move. What they call this fake out, it's hard to say. Would I jump in on Monday based on this price pattern? Probably not. I would like to see a bit of, and I mentioned this, a bit of bullish price action when the market opens on Monday to see, hey, do we see signs of a bounce? And if you don't, probably stay away because it looks also kind of, hey, I'm catching a falling knife because we're coming down so fast. So that's not sure if that makes any sense, but that would be my take on this. And,
And
and, and
I'm
then you
looking at
don't,
volume IQ, and there's not
yeah,
really much below us on
yeah,
volume IQ, so maybe we're going to get a bit of a deeper retracement.
yeah. And don't take these words, Lenny, like fake out. Market tries to fake you out too literal. It's just, my way, German way to explain what I see. but the labels are what you want to call it. It's not so important. What's important is here the price is approaching a key level, a liquidity level, which may act as support. That's what I'm seeing. These are the hard facts. So,
Well,
and
this
because
is
of
an interesting.
yeah,
Sorry, Daniel, continue. But this has confused me actually. I tried to look at KO on TradingView, and Fabian points out, I only know Coca-Cola ticker KO sector rotation matters a lot. Is it same with the ticker Coke? So I'm looking on TradingView. It seems that the ticker Coke. Oh, that's what you're on here. Okay, KO is a different symbol.
oh yes,
Sorry about
that's
that,
true.
guys.
See, I was
Coca-Cola Consolidated
yeah,
versus Coca-Cola Company.
that's I believe that's a supply company to the actual Coca-Cola to KO. Uh, Good point. This is not the Coca-Cola. Nonetheless, I'm very I don't discriminate at all what the stock is as long as the technical setup is solid. And I believe it is here. So yeah, that's
Maybe
my take.
Daniel,
Yeah,
for next scanning session, or maybe this lunch and learn, it could be a little topic. Because Kevin's pointing out some interesting things. He sent some videos. I'm going to check them out. Just saying that apparently in the news, there's huge arbitrage between East and West. China buying silver at higher price, driving prices up globally so they can power their solar panels and cars and stuff. Maybe this would be a good time to do a segment in the next week or so on like silver companies and things like this, and just maybe a larger review on
yeah.
silver in general, because it's definitely the hottest thing happening right now.
Absolutely. But if you already have access to our dashboard, one thing you can do to figure out what are some of the stocks in silver right now, you enable the sector industry columns here, and you go to the filter next to industry and type in silver, and I believe you'll find some right away. Yeah, you can see them here. See, some of them will pop up right off the bat. Cool. Anyways, yeah, so interesting session was the first one of the new year. It's good to be back. I'm happy. And if we miss, well, let me go back to my slides real quick. Uh, if you are interested in our great liquidity view dashboard, or at least would like to try it out for 1 week for free, simply go to tradingindicators.com/view. There's no contract, no strings attached. Uh, Even for the monthly and yearly options, you can cancel at any time. So go to tradingindicators.com/view for that. And lastly, if there were some questions which were not answered, Nicholas did a good job and bringing most of those to my attention. Don't be shy to reach out to us via our homepage, tradingindicators.com. Click on support, then contact, and then enter your question into the contact form. And this one will go straight to my inbox, and I will do my very best to answer this question as soon as I can. All right. So with this, guys, I wish you all a great Saturday afternoon or Saturday evening, depending on where you're calling in from. And we will see you next week on Tuesday with our lunch and learn session. And then we also have our live trading workshop, either on Wednesday or Thursday. The date will be sent out, but it's definitely scheduled for next week, where we're going to use our new 1IQ indicator to, among other things, to look for interesting day trading setups. With this, guys, have a great afternoon. Thanks, Nicholas, for your help, and talk to you soon. Bye, guys.